Welcome back. You with us here on Opening Fire. You've got the Nifty, which is down about 11 odd points or so. Announcement coming in from Justdial this morning that they're basically going to be doing a buyback at 1550 rupees per share, utilizing up to 25% of their paid-up capital and free reserves. I've got the management on the phone line. Mr. Ramkumar Krishnamchari is Chief Financial Officer of the company, joining us. Sir, thank you very much. Good morning. We spoke after the quarterly results. I just want to ask you, the buyback announcement came, the details are here. How is this buyback different from, how the usual buybacks? Because this is through the tender route, right? Could you just explain how this will work?
This is through the tender route, and it will be on a proportionate basis among all the shareholders who tender the shares. Yeah.
Shareholders can tender their shares for the buyback,
Correct.
right?
Correct.
And the amount of shares accepted will depend on the total shares tendered.
Exactly. It will be on a proportionate basis.
Proportionate basis, right. Fair enough. Could you tell us what is, is there any minimum amount that you're going to be buying back?
It is up to 170 crore, which is the 25% of share capital and free reserves comes to about, as of March, comes to about 170 crore. So that's the amount we are setting aside for doing this buyback.
Right. No, I'm saying that's the amount, that's the maximum that you will spend, right?
Correct. But again, it all depends on what's the amount tendered and etc. So we are saying maximum up to 170 crore will be spending on doing this buyback. And that comes to the price at which we are doing it comes to roughly less than 2% of the share capital of the company.
That is, assuming 100% of the acceptance ratio is 100%. What would the numbers be then?
That's about roughly 1.2 million shares.
Okay, that's about 12 odd lakh shares, right?
Correct.
As against 7
crore shares that we have.
7 crore shares. Promoters have about 23%, right, sir?
Promoters groups has 33%.
33%. Okay, group has 33%.
Correct.
Okay.
Correct.
All right, fair enough. Now, I asked you this question the last you were on the show when the first announcement was made about, deciding to raise capital and now actually deciding to spend money on this. Could you just, for our viewers, explain that logic once again, sir?
Yeah. See, the issue was last time when we came up for raising, our view was that, look, a lot of money is getting into this sector and perhaps good to have an option for raising money through a resolution. That's about it. But then, we have seen that obviously the valuation levels, etc., are quite stretched on the space, the entire sector. And we believe that on the private space, and then the question came as, what do you do with the cash that we already have? Because beyond the point, every year we are adding about 200 crore of cash. That's what the core business, search business throws us. What do you do? What's the optimal use of cash? Either we do a high dividend or do a buyback, and we believe that this is the optimal use of cash is to do the buyback, which is why we are doing it. Also, the fact is that, look, the share price have, from our perspective, it's an attractive proposition to do the buyback at this point of time.
Right. But you would still recognize that to many it would seem as a bit of a turnaround, right? From a position standpoint.
Well, I would say the raising, the enabling resolution was a bit superfluous one. Perhaps maybe we should have waited and seen before to decide to do the resolution. And not this one.
Sir, listings, paid campaigns, etc. continue to grow 25% last year. Can you talk to us about pricing, sir? Because that still remains flat, weak, right? And that, of course, is a function of overall economy.
Actually, the pricing we allow we have the algorithm. We allow the algorithm to determine the pricing. We don't, and it's completely market-based, depending on demand and supply. What actually keeps the price at a certain level is because on one hand we are expanding into tier 2, tier 3 cities where the ticket sizes are low. it will tend to drag the average down. And on the other hand, you have this existing customers paying more with the search volume going up. Naturally, the price increase is inbuilt into the algorithm that drags the prices up. So both these factors have opposite effect. So net-net, the prices move in a range up or down to 1 to 2%, depending on the relative impact of each of these at any given point of time. We have to recognize that we added 300 people, plus we have our focus is expanding our footprint in smaller cities. So the impact of the the smaller ticket sizes of the smaller cities is higher as we move, and we believe that this will be the case as we move forward, we expand geographically in India.
Okay, fair enough. Mr. Krishnamacharya, last time we spoke, we also spoke about Search Plus and the timeline launch, the timeline for the launch. Could you tell us what are the launch costs going to be, sir? And when are we going to start seeing some of that?
Yeah, as we mentioned again, roughly around 100 crore is what we think that we'll have to spend to introduce Search Plus to the wider Indian consumers, and we have no reason to change that at this point of time.
100 crores, right? Okay. Fair enough. Mr. Krishnamacharya, thank you very much for your time. Good speaking with you, sir. Appreciate that perspective from you. That's Justdial, Chief Financial Officer, with some clarity on the buyback and the overall situation as well. Yields, pricing for the listings and Search Plus launch costs being about 100 odd crores. 1135 orders per Justdial is about 2.25% higher. Just want to take a quick look at the Nifty and also want to take a quick look at Coal India and see what that is doing.